Charlie Kleisner. People that are active in the area of impact know Charlie very well. He's one of the very prominent figures of impact investing from the US. Hi, Charlie. I can see you. Can you see me?
Yes, you're all good. Wonderful.
Wonderful. Nice shirt, by the way.
Oh, yeah.
A little more colorful than my one.
I figured, it's hot here.
Wonderful. So, Charlie, again, very warm welcome from our side. Last year we were talking also online, but this time I'm here in presence. But hopefully next time I'll see you here in person too. Hopefully, fingers crossed.
Yes, can't wait, Rene, because you bring good energy, and hopefully we can, carry that forward into the audience and everything else. I'll do my best, though.
Yes. So to start, Charlie, I just, as a short introduction, your background is basically an IT background, and basically all of you that have probably their iPhones in their hands or their MacBooks have something in their hands that Charlie basically built, and that was due to the fact that he was building NextOS, which was basic or the basis for what we see today as iOS and macOS, and that's very interesting. But that's not what we're talking about today, because you changed your focus fully towards impact investing, and we want to have a very short impulse before we start into the panel. So. I mean, you started Tonic. Tonic is one of the largest global networks of impact investors. And prior to that, you were already investing in impactful ideas. And my question is, what was at first, the personal motivation to start this? And the second question is, what is your personal definition of impact, and what are your cornerstones of your investment philosophy? Probably that I would say the stage is yours virtually, at least.
Yes.
And so give us a little overview, Gary. Gary? Charlie. It's a Y in
Wonderful.
The end.
Okay. Okay, we're all set. Thanks, Rene, for the great introduction. I'm so happy to be here. And thanks, Sabine, and all the organizers and the participants. And what a great start with Gary's presentation. Going deep into impact with smallholder farmers to increase their income, certainly, a very deep impact play. So a great kickoff of the day. So the question, Rene, of the personal motivation is a very important one for impact investors, right? And when Lisa and I came into money as a side effect of our work in Silicon Valley, we had to ask ourselves the question of the meaning of wealth. And we had our values already defined and refined them with wealth. And we could not possibly not acknowledge our values in our investment strategies. And our values had to do with sustainability and circularity and themes that are now all impact themes, social justice and inequality. And so from that perspective, we think that certainly for us, wealth comes with the responsibility of making a positive contribution. So we could not possibly imagine a way for us to just make more money, thereby knowingly messing up the environment and the social justice of populations. But we demand transparency, and we demand accountability, and we want to hold ourselves accountable to do that. And the second piece of our motivation is really systemic in nature. I have a PhD in computer science, and right now the systems are actually designed wrongly in order to enable the what I call the big transformation on the planetary scale to happen, where humanity needs to figure out how to live in harmony and within the caring constraints of a finitely resourced planet. So this is really about our individual approach to impact investing, which I want to summarize in 3 phases, basically, and share with you how we started quickly, and then how we moved into systems, and how now we moved into consciousness and human awareness in order to actually change these systems. So when Lisa and I started in 2000, we selected social entrepreneurs to be the main theme of our investment approach. And we chose that because we were inspired by social entrepreneurs because they were entrepreneurs. So they challenged the status quo, but they also wanted to accomplish a positive social and or environmental impact. And that really spoke to us. And at that point in time, we were amongst the very first ones. Skoll Foundation just got started, the Media Network just got started, and then our foundation just got started. And we supported individual entrepreneurs. And we quickly figured out that in order to support more entrepreneurs, we needed some leverage. And so we actually started, I think it was the first impact accelerator, business accelerator in India in 2004 and 2005, where we over the last 15 years actually enabled hundreds of entrepreneurs to have a more impactful business, both not for profit, for profit, and in between. So the notion of blended capital already came into being for us, and we used our grant capital to run these accelerators because you can't make any money with them, and then we invested in some of the graduates of these accelerators. We did the same thing in Vienna about 12 years ago in partnership with Erste Stiftung and Impact Hub Vienna, where we co-founded the Investment Ready program for Central European entrepreneurs. And Lisa did a similar thing in Hawaii. She is Hawaiian, and hence my shirt in reference to her. And working with Hawaiian entrepreneurs and doing which is really interesting in COVID times right now. And the island economy is a natural environment and a unit of sustainability and regeneration and resiliency, right? But lots to do. And now I helped the Impact Hub Tirol get off the ground. We just had the opening 10 days last week, and they are doing an impact accelerator. And I advise them in doing that with SOS Kinderdorf and other partners to do that. So we said, well, how big is our impact supporting social entrepreneurs and accelerators? So we moved to the second phase of our approach, and that's we questioned the system behind that. A lot of social entrepreneurs, unfortunately, are just dealing with the symptoms of the crisis and not with the core issues of the crisis. And so when we looked at the systems behind the economy, we saw that actually the design flaws of the economic system and the financial systems are preventing a lot of social entrepreneurs to be successful. So including, like the modern portfolio theory, exponential growth, externalities. This is not about this, but our theory of change became that, well, if we are able to change the financial system such that positive and negative impact is integrated into the system, then we will have changed the system, right? Because then, of course, you would not be able to make an investment and have a negative impact and get a positive return. And so we adopted our strategy and our approach to include that as part of our mission. And so what that meant is we had to do a system analysis of the existing system, right? And the supply side of capital, demand side of capital, and all the intermediaries. And that's when we started 11 years ago, a Tonic network, because there was no network, globally speaking, that enabled private investors like us to actually collaborate, to have more impact together, and to change the systems. That's when we did more accelerators on the demand side of capital, but also with our relatively small amount of capital, one of our approaches was to support first-time managers who had a different impact thesis than established impact managers. Because in first-time managers, there's no institutional capital that can actually invest in that. So we invested in, let's say, Better Ventures, Aquaspark, Grassroots Business Fund, Zook Ventures One, Beartooth Capital One, Global Partnerships, Eco Asset Management Partners, Microvest One, and so on and so forth. And 90% of these first-time managers are now into their second and third fund. So we consider that actually success for our interventions, right? We invested in intermediaries because there's no intermediaries at that point in time. Sonnen Capital, now a pure play in the US. Impact Assets, a pure play in the US for philanthropic capital. And we invested in order to do systemic change in first-time instruments that were new. Like we invested in the first social impact bond in Peterborough in the UK, but not in order to show that recidivism in this instance can be reduced, but to prove that a new financial instrument that actually explicitly ties the financial return to prove an impact. That was our interest. And we wanted to have tens of thousands of social impact bonds actually out there We failed on that one. We have 140 or 100, whatever, 150. But we understand why it's failing to scale. And I'm addressing that in the third part. So what we do is we experiment with something, and then we see if it works, and then we adapt our strategy. And that I come to the third part, how we adapted it to take care of social impact bonds, for instance, not scaling yet. We invested in themes like democratization of impact, like the first social stock exchange in the UK, which was a financial disaster. But now I see new platforms like Yova in Switzerland taking off, and they're doing social stock exchange for anybody, not just the rich investors. And so we pave the way usually, and then mainstream impact takes off, and hopefully makes it a success. During this phase, we invested a lot more in blended capital structures like Metal Farms, Acumen Capital Markets, Global Partnerships, Graph. So blended capital structures are an approximation of what I really want to do, and that's change the incorporation model such that impact again is at the core of any company that's going to be built. And we engage in research with Tonic and outside of Tonic to co-invent the postmodern portfolio theory, which clearly doesn't work for impact. And that's moving along, and we need to get data sets that are actually robust so that we can deploy artificial intelligence to figure out how impact risk and returns are related to financial risk and return. And we engaged in movement building. So all that happened in the second phase of our approach. And so 3-4 years ago, we said, okay, how are we doing? And we published a report. You can look it up. It's quite a comprehensive SDG mapping, IMP mapping, ESG mapping, mappings galore, and mapping it to our theory of change and all of that, and IMP. And I think we're doing quite well. But why is it not taking off is the question that I have to ask. Why is the system not really changing? So because we know what to do, we know that we need to redesign the systems to make circularity, regeneration, resilience, regionality at the core of the systems. And we don't do it. Why don't we do it? And so the answer to that question to me is that the awareness and the consciousness of the population is not yet big enough to force politicians or elect politicians who actually will be held accountable to changing these systems. They're just talking a little bit because they're worried that they lose their constituencies, right? And rightly so, because that's how that system works. But if we were able to all demand from our banks that they show us that the money that we give them, our money that we give to them, right, that they manage it according to values that we could agree to. For instance, if I care about peace, why would I want my bank to invest in weapons? Well, I don't, right? So I don't bank with banks that do that. And similarly with your lifestyle and with what you consume, right? We all have the responsibility of actually adapting in order to create the big change that has already started. And that big change will actually change the economy to a deep impact economy. Otherwise, we have much bigger problems than today. And systems do change under pressure, and the current system is cracking, as evidenced by social unrest and by climate change. That's a runaway climate change right now. That's going to be very hard to pull back. And so unless we be able to stop that. And so this is the issue of the day, of the decade, actually, right? And so that's what we do now. And my approach today is to combine my technical background. I know AI really well. I know blockchain really well. I know Internet of Things really well, and all that. I know consciousness really well because I've worked on myself for at least 20 years, in figuring out who I am and what the impact of my life is. And therefore, I want to combine that. I cannot really throw that away when I'm doing technology and the impact side, right? And so I think the follow-on model of private equity and debt for impact is actually the tokenization of impact. And that's why we're investing in that. Tokenization just means that it's a digital representation of impact. So we have been working on this for a long time. So now we can build on that. Web 3.0 is actually happening. The first, I could never invest in cryptocurrencies because they're built on the wrong technology and they're messing up the planet. But the next generation of tokens built on the new Web 3.0 infrastructure, that's DeFi, right, will actually work. And so we're working on that. And I'm working with people like John Fullerton and others on moving from decentralized finance to regenerative finance, such that you can imagine a world where all the players, when they actually do something that's related to deep impact, get the tokens that are actually deep tokens, and then we build a marketplace around that, and that will be the vision that I think could turn things around.
Charlie, we need to wrap up a little, but I'd really love to chat with you for the next 3 hours, especially about your idea of Impact OS. That's probably your next big thing. So, Charlie, thank you very much for this very, very interesting and I think very holistic view on what even has to change for making impact mainstream. And again, hope to see you next time in person. And thank you here from Vienna to you, Charlie. Thank you.
Wonderful. Thank you so much. Bye-bye.